without further ado, we're going to start with Demira. Thank you so much for coming, Dave.
Thanks. Thank you, Pablo. So my name is Gene Demira. I'm considered an anti-money laundering expert. I'm responsible for the design of the anti-money laundering program for Manulife Financial, predominantly for Canadian division. So that's my employment and work there. I'll just kind of kick this off though by saying that all the different content I'm going to provide you today, I'll give you the links and where you can find further research. This is not considered legal advice. I'm a compliance officer, so my job is to provide interpretations for my company for how laws and regulations apply to our business. So that is my career and my life, but I'm not officially providing any position on behalf of Manulife and not providing any legal position. But that's also the reason why I brought in like the AML shop, and there's also other firms similar to the AML shop in that they are consultants and legal advice that could put together anti-money laundering programs. But I'll give you the different pieces and perspectives and can answer your questions. So what I'll do is I'll start off with a 20-minute high-level overview of talking with the world of fintech, and I'll give you some background on this picture that I'm a fan of. And then after that 20 minutes, I'll definitely be open to any questions that you want to pepper at me. I'll be your dartboard. I'm very comfortable in that space, and that I presented at numerous conferences, both in our industry and anti-money laundering, as well as financial services. My background itself is I started off in IT. I ran computer systems for a mutual fund company and mutual fund dealership. Dealership is a provider of financial services for certified financial planners typically, and they sell securities, mutual funds, GICs, the whole gamut. So I was in IT. I was running different tools for a small shop. And then I jumped into compliance and regulations as a part of filling different needs, specialized reporting tools, etc., aka fintech, is what brought me into the anti-money laundering space. So as this evolves and we have bigger names and better names that are using technology for different tools, there's a lot of power to that, and that's an exciting innovation time for us in financial services. But it's also an opportunity to use those tools for both good and evil. So those are the things that we'll be talking through today. So thanks again for Pablo and all of you for hosting me tonight. I'm looking forward to the chat, and let's dig right in. So again, my background is in insurance, securities, and banking. I've worked in both the credit as well as the asset side of banking side of things. So I do have a diverse perspective. So as we go through different things, I may bounce around across different components of financial services, and feel free to ask those questions. If I don't know, I'll flat out say I don't know, but if I know a place that you can find that answer, I will forward that too. So this pretty multicolored picture, that I think is a pretty multicolored picture, I'm stealing blatantly, as you can see right over here, or sharing. It's a public domain document from the International Monetary Fund and their analysis paper that came out last year in June. So if any of you Google or Bing search or any kind of search IMF, the International Monetary Fund, and then FinTech report, then this will come up. And this is one page of, I think it's like a 60-page report or something along those lines, that I personally like the different elements on how it breaks up different components of the key elements of financial technology that are innovating at the fastest speed today. So if we end up breaking this down, we have both the core foundations that I'll very briefly touch through, and then how does that break into, as a financial institution is going to apply this, what kind of laws or guardrails or other barriers that they have to keep their business going, that they have to keep in mind as they apply these fancier tools, or some different examples I'll give. So the bigger categories are very helpful for us, so then that way we can also see how some of these different innovations can have some practical applications. And these examples that they have here, it doesn't necessarily mean you can't do distributed ledger in the managing risk category over here, but they're just giving you some good examples of how they're seeing, the IMF group there was seeing where the biggest value proposition and the biggest dent into the marketplace is likely to be in the near future. So as we jump into the first piece of Artificial intelligence and big data. Personally, I'm a very big fan of a lot of the innovations that have been coming out in the financial services space in here. However, that being said, like my brother, he actually started off he actually has his degree in computer science and that specializes in cognitive science at U of T. So artificial intelligence isn't really new, but it is picking up speed on how we can apply it in our innovations and our technology. One of the biggest pieces to that is the volume of data that has expanded across financial institutions, but also the quality of data and the ability of having more tools and recognizing that you need to improve your quality of data. And then as soon as you do get that quality, then you can definitely use multiple different sources of information to extrapolate a great deal of value from your information. And that value is, an example is like before you may have heard the cliche of an 80-20 rule that you basically say, okay, here you design this process and it'll meet 80% of your clients, and then the other 20%, well, you may have to send them off to this other sub-team. Well, to me, the AI and machine learning is not breaking it down to 80-20, but it's 80-20, but then that 20 gets broken down 4 times, and then that 20, and then that section gets broken down 2 more times, and each time you're pulling value out of that. Whereas previously a business may say, well, I'm going to sell you mutual funds and I'm going to sell you a GIC, and anything more complex than that, I can't train my team for that. I can't train my financial advisors to provide all of that piece. So it has to go to a specialized area. Personally, I see that machine learning and AI will give more tools to say, well, you don't have to train everyone because we'll have those tools at their disposal to get to those greater levels of detail. So that's where there's going to be a lot of efficiencies in the back ends for larger financial institutions in order to dig deeper into the different levels of detail, provide much greater options for client needs, and especially meeting different life event choices that we're going to have. So right now there's a fair bit of standardization that happens in the industry, that you have very similar forms that you'll see from one bank to another to another. A lot of that is because of our regulatory requirements to check the box, but it's also for our product design, because every time that you have different changes from client A to client B, you have to code that to support that in your system. And machine learning and AI will really help to speed up that innovation, that you can code to all of those different flavors that person can have, the 31 flavors of ice cream or 31 flavors of their financial product. So that's going to be posing some significant challenges, but keeping the quality of the data is going to be another nuance to that, because once you start going into the larger stream of things, data variance really is painful. I'll give you an example of my own name. My legal name is Eugenio Dimira, D-I space capital M-I-R-A. Well, I also go by Gene. So the different variants of my name that are proper, legal, etc. are Gene Dimira with no space, Gene Dimira with a lowercase m, no space, spelled incorrectly, D-E, and then all of those other different variants that end up getting into that mix. Those then sometimes make me look like a different person to different financial institutions. So those are some of the nuances that are challenges for financial institutions. When you're dealing with big data, well, step one is just how many are just one customer versus multiple customers. Addressing is another similar example like that. So some of the different machine learning and analytics will do some of that analysis for us to make sure that those 4 or 5 different variants of even my name, that's really all one person into that mix. That also gets into fraud detection and other components as well. Some elements of fraud that happened as little as 10 years ago, where some people would end up stealing someone's ID, like their full identity and the like, and then they would end up like trying to line up getting as much credit off of that ID as possible before doing what's called a bust out, that they maximize it and then steal those proceeds and move on to another victim. Well, a big part of that back then was actually they would do that variance of my name, for example, as a part of that, so that way it's even that much harder for the financial institutions to see, do they have one account with that fraud or 4 or 5 in that list. Machine learning and predictive analytics is helping hone in on those things to tighten those types of scenarios up in a big way. Now, once that happens, organized crime will use it for other purposes as well, so we have to keep on top of that game. Going into distributed ledger and blockchain, there's definitely a lot of different components of payment management and working through back office and reporting areas and benefits there. One of the examples with blockchain that I'll give that I'm personally impressed with is, I'm not sure how many of you know about this, is in the world of corporate registries. This is a big item in anti-money laundering. In the world of corporate registries, knowing who's behind a corporation is quite critical, because the corporation is a person underneath the law. So knowing who's behind a corporation is critical, because one company can own another company, and that can hide financial transactions from law enforcement and also make the appearance that something is legitimate. So it's one of those things that the beneficial ownership of a legal entity is one thing that we always trace through. This is a hot topic in Canada right now that the federal government's already committed to doing more work on making sure that we get beneficial ownership information in our databases, so that way we could, if we see ABC Corp that owns XYZ Corp that owns another Corp, we make sure that we know who we're dealing with, and if there's any negative indicators of criminal proceeds there, we can track that down. The blockchain example that I'll give you there, and distributed ledger technology example, is there was a proof of concept last year done by BC with a group called DIAC, the Digital ID and Authentication Council of Canada. It's an industry group that was set up in 2010 by the government. And in that industry group, they worked with the BC registries, as well as with some technology leaders, and they did a proof of concept to talk about using different nodes of different tables, one table for each province, and they could have a joint connected registry with the relevant information that you need using that technology. So as soon as you update the Alberta registry, instantly there's connections with BC and other areas. Each one holds their own tables, but you have those adequate connections using blockchain and the security provided there. So that's an example where technology is already going in for some real world problems and likely able to speed up innovation in those spaces that could defeat crime. I'll give you an example where shell companies and the like has been used for good and not evil, but you could pretend on the opposite is one fun example out there is Disney World, Florida. And I've got confused looks on my faces right now. One person nodding, so he knows the story. When Walt Disney was looking for a new location for Disney World, and he's looking somewhere on the East Coast, he saw all this different swampland. But if he realized that if he purchased it all from one company name, word would get out that this company's buying all of this swampland, and there's got to be something, and the price would just shoot up through the roof. So instead, they set up multiple companies. Each company bought different parts of the swampland until they had enough concentration, enough space to build Walt Disney World. Well, that same strategy is anti-competitive behavior, technically, questionably ethical, and it's a strategy that is used by organized crime quite actively in order to hide their different proceeds, hide their different networks, and make them look legitimate. So with the beneficial ownership registry, Disney wouldn't be able to do the same thing today, or as soon as this is fully enforced and in place. But that same strategy is also used by other organizations in those spaces. Oh, shoot. Thank you. Sorry, my screen's here now. That's the main. So going into the laws, and let me just touch on that as I get this back, this visual back up, is the typical laws that we need to address that you'll end up hearing the most about. One is the Proceeds of Crime, Money Laundering, and Terrorist Financing Act. Especially as we get into the digital currency space, and you may have heard, well, there's a lot of wallets, they're collecting my ID in this way or that way, they're getting my credit card information, so they gotta be collecting an ID, they're okay, the same as a financial institution. And respectfully, from a lot of the analysis that I've seen, the highest number I've seen of the percentage of wallets in the world that actually have any form of customer due diligence components of that ID is the highest number I've seen is around the 10% mark. So when you have 90% of a property base out there that you do not have the underpinning and the history related to that is one really big challenge for financial institutions to really work through integrating into a digital currency network, because we need to have good confidence that the source of funds and source of wealth does not have linkages to proceeds of crime. So the traceability of that is also a lot of effort and a lot of money and a lot of expense, and who's going to pay for that? So in order to get that into the network, that is one of the big challenges. Another big challenge that we're faced with, and I remember getting hit with the question very recently, well, why can't I hold cryptocurrency in my registered retirement savings plan? Well, we got to take a look at what is a registered retirement savings plan. It is something that is formed underneath the Income Tax Act of Canada. And to have something in your registered retirement savings plan, it needs to be valuated back to Canadian currency. Now, I know you can hold some US and other currencies in there as well, but you need to have the ability of reconciliation on an ongoing basis done by the financial institution. Well, to set up those systems, even to add like a euro, to set up the euro valuated funds into your RSP, that financial institution would have to do that calculation every single night. So a lot of financial institutions don't even bother adding that because that's a significant amount of complexity, and the market doesn't really ask for it to that degree. So the amount of market integration in there would be immense, and the reporting that goes back to CRA is also significant into that mix. The other component on RSPs is that you need to have unencumbered funds in there. If you have any funds that are tied to a legal relationship elsewhere, like a loan or something else, then that entire contribution receipt that you got for it could actually be null and void by the CRA, and then they can redo all your taxes for the past years, fine you, charge you back interest, and there's nothing you can do about it to recoup that. So there's different risks on both the consumer as well as the financial institution for a lot of those pieces. So the Income Tax Act is a big piece related to cryptocurrency, and I think a lot of you have probably read articles from the IRS on how they're tying into that as well. So that'll be an interesting dynamic to see how the different currencies kind of move forward. The other element on cryptocurrencies is also the commodity component to it. So if the ICO is also releasing part ownership in the company or the other parts as well, well, that's the premise of the core principles of all securities laws. So when you have an initial stock offering, well, they're following rules underneath the Securities Acts as well. Even if it was a private offering, then there's consumer protections that are built into the securities laws. That's why typically accredited investors are the only ones able to buy certain types of businesses that are trying to sell off some of their businesses in an offering memorandum standpoint. So those pieces, they're trying to figure out how does this fit in? How can they be more flexible with the laws, balancing consumer protection? Because once someone, you'll hear in the news of different pyramid schemes or things that go collapse, and somebody just lost their life savings and the like, and they turn to the government of why did you let this happen? Why didn't you have more protections? So there's that catch-22. So the government itself is listening and trying to empower innovation from what I've read and what I've seen, but at the same time having those balancing powers for the consumer protection in there too. Yes?
You mentioned that only 10% of cryptocurrency participants are verified. So if you are in a transaction of this kind and the other party is proven to be wrong, are you aware of a situation where how that was settled? Or?
Well, the 10% of the verification is like your Coinbase wallet. Coinbase is one of those solid players that gets your ID, but there's a lot of other wallet providers that have existed throughout the world that don't do that. So like certain wallet providers that are there, and or Bitcoin that has been established without being inside a formal wallet, and the like, and through other mining methods that there has been no ID ever performed. So a lot of the wallet providers are only allowing like the purchase within their own networks and not letting external coins come in and the like. So those spaces usually it's not too bad, but it's the challenge there is whenever you did have an unverified coin coming in that they could have been mined before any of these wallets were even set up, the formal wallet services even set up. The challenge is like, how do you do traceability back to those coins to the point of mining, or what level do you get comfort that holding came from somebody that bought it legitimately off the miner, and then that there was another legitimate transaction, and you have enough traceability that you know that the source of funds and source of wealth are from legitimate means. So that's one of the challenges that we have related to crypto is it really is cash, just like cash transactions. Cash transactions themselves, who had the bill before you?
Nobody would know.
Exactly. And that's why when you see like the movies love cash, it's all about cash. Well, if you look at the Bank of Canada had a report in December, 30% of transactions by volume are now with physical currency, and 10% by value are by physical currency. Who deals in cash anymore? Does that mean proceeds of crime went away? No. Proceeds of crime is more than just financial value. It's property as a whole. There's a significant amount of known or strongly suspected, known, whatever you call it, you will, proceeds of crime embedded in real estate. Right? And how far back are we going to go? If we talk about the wonderful liquor producers that we had that during the Prohibition period had lots of money, that they bought real estate, they bought factories, that technically was proceeds of crime because back then it was illegal. Well, what do we have? Like, how do you forward that forward? At what point do you transition? So those are different challenges.
You say Revenue Canada chose high-value postal codes and went and audited people to make sure their income could match the quality of that house.
There's a lot of tools out there. We take a look at those same types of elements, is taking a look at the real estate values. The real estate values in Vancouver and a lot of the inflation in there. Transparency International has some excellent reports related to nominees of foreign corruption, where there's funds coming in from overseas. And whenever you have overseas funds, we want to encourage innovation and global commerce. But we also have a challenge on our own side, and financial institutions have compliance programs to work on fighting corruption. And that's one of our challenges, is if I end up getting money coming in from China, where there's 1 million politically exposed persons, estimated, then how do I know that that money couldn't be from corruption from that space? And I'm not picking on China, I'm like, that could happen like any non-domestic country. How do I know how clean those funds are? And that's an example when Iran re-enters into, eventually, hopefully, that political challenges happen, resolve themselves. But whenever they do, then how do you solve for corruption proceeds versus non-corruption proceeds for any foreign jurisdiction? And there's a lot of different things that the AML industry has been working on and working through a lot of that. Yes?
Do you feel a sense of urgency to get regulation on the crypto space so that, because I mean, the longer that they wait for regulation, the more it pushes the money into fringe methods of funding any crypto investments. So going back to the RSP, there's ETFs are a way to get funds, and other, like that's one way to enable it, or other RSP funds that banks create themselves, or mutual funds. But what, do you have a sense of timeline?
No, that's a great question. So just to repeat it up for the group, is there a sense of urgency of trying to get crypto within some form of a comfortable regulatory environment? And I think there is. There's been a lot of work being done by governments worldwide in this space. There's different strategies for that. So one strategy I'll highlight right off the bat is something called sandboxes. Singapore has a really good one. There's a number of different other countries that have sandboxes where you're testing out different financial services tools that can meet these needs. Just want to make sure it doesn't fall asleep again. And so if you're creating the next great fintech, get yourself into a sandbox, and then you can flush it out. And the benefit of a sandbox is the regulators see what type of solution you're doing, how you're doing it, what kind of risks come about from that solution, and they may lighten the load of what the regulatory challenges are for you, so you can work through that. So there's a lot of different tools tied into crypto that are within that, and crypto has a great deal of utility and benefits to the strategic way that it's being, it can solve things, like especially ICOs, and there's a lot of great things that can come out of these tools to make things more efficient, more effective for us in financial services. So financial services isn't against fintech at all. They're looking at those innovations. How can it make life easier for all of us? How can it get rid of the less effective work that we do, make us all more efficient? Crypto isn't necessarily seen as a threat. It's a matter of how do we make sure that we have the right utility and benefit of payments. With how long it takes a Bitcoin transaction to settle, that doesn't help us when we're at the coffee shop getting a coffee, right? So like, what is the right utility balance? And there's other peer-to-peer and other fintech payment streams that are coming out that are going to be a heck of a lot better. One of the challenges, though, is that they're still proving those technologies. They need to finish proving those technologies, make it more robust, make it executable into the mix in a way that it can be adopted by consumers, is robust, is interoperable, meeting overall industry, like different industry standards. And then regulations will match to that. The government is constantly keeping an open ear to these. The governments talk to each other. They talk to financial, to industry. We don't hear about it because it's one of those things that there's a lot of work that's behind there to try to get it right. And it may seem like regulations are slow, but it's coming. Like, there's already been addressed in the Canadian context. Virtual currencies were listed within the act that was updated more than a year, 2 years ago now, and it's just a matter of waiting for the regulations to empower it. And the difference between an act and regulation is just high level. An act is what's passed by Parliament, that you have politicians all talking about. It's high level. Regulations is the level of detail that's needed to execute on that in practice. So that's what we're waiting for in Canada, is those regulations.
The other thing that I might say, if you don't mind, is certainly, so there's a lot of public and consumer pressure that comes down onto the regulators because they read the headlines every morning the same way we do, and they say, wow, we've got to do something or else we're not going to get reelected. That's where their pressure comes from. The other side of the pressure is from companies that want to launch ICOs, and they want regulatory certainty. All they care about is, if I go out and I want to raise 10 million bucks, is the regulator going to come back to me next week, a year from now, and say, you didn't do it right? And so, and I would say that's as strong a force as any.
Yeah.
I mean, so the consumers, that's important, but the people that are launching coins are nervous, justifiably so, because the rules are this way today. You know they're going to be that way tomorrow. You just want to know where they're going to land. So everyone's now trying to go as far right as they can, and going as far right as you can is expensive, and it's especially expensive if it's not going to pan out for you. So it's, I think it's coming at it from both sides.
Like,
sorry for the intro.
no, that's a great complimentary point. Like the question I'll ask all of you is that have wallets and that have any crypto coins on it. Did you get a tax form at the end of the year? How many? You got a T5, T5008 for your capital gains? You got it?
No, so why would I?
Yeah, why would you want to? That's exactly right.
So
Turn the camera over there.
In order to abide by our laws, if you have a capital gain, you have to pay your equivalent taxes. Do you have your withholding tax on any interest and any other components related to that? Are you reconciling that? When you have your losses, you want to write those off against your capital gains as well. So the part that I'm going to be curious about is everyone saying, oh, Bitcoin, it's going to crash. I'm not going to say if Bitcoin's up or down, whatever. It'll be what it'll be. Everyone has their own perspectives on that. But the curiosity that I'll just ask openly for the group is, let's say if you did have Bitcoin and and it's valued at 10,000 and it drops down to 5,000, do you have a capital loss you can now write off against other capital gains and save that taxes? Well, did you put in your capital gain when it first came in anyway? Like, so those are the pieces that like it can be treated very much, and has been treated very much like a commodity. Like, even if you bought gold and gold goes up and goes down and you sell it, other commodities, you have the same expectation underneath the law and taxes. And if you're the anarchist and say, well, I shouldn't have to pay taxes, the government wants to get their hands into everything. If we don't pay taxes, at the end of the day, my personal philosophy on this is, well, I like having schools and healthcare and other things like that. I think that's a part of the common good that we have, is to pay our share, and that's a part of the laws. Tax evasion in Canada, as of 5 years ago, became a predicate offense. And what a predicate offense means, well, if you watch US dramas and everything else, it's like a felony in the US is a predicate offense in Canada, or indictable offense, which means if you make money off of a predicate offense, that is proceeds of crime. So if you're not paying your taxes to a certain level of known penalty in Canada, then that is proceeds of crime that you are now holding. And if somebody knows that you have proceeds of crime, guess what? They have to do reporting that is subject to seizure, depending on other things. The U.S. has had proceeds of crime tied to tax evasion for over 100 years, I believe. So those are some of the elements into the digital currency. So we have securities laws that we have to abide by, Income Tax Act requirements that have to abide by. It's not that the banks themselves really want to move towards innovation, and these are some of the pieces in there. So the next piece that I'll just touch to is getting into smart contracts and biometrics, if that's okay. Or did you have was there another question?
Speaking about traceability, the ransomware usually is paid in Bitcoin. So it looks like there are like technical means by which the identity of the criminal cannot be traced. Is that true? Or?
Yeah, there are a lot of challenges in there, especially with mixers. That causes a lot of challenges with layering. The three components, the textbook components of money laundering is placement, and that's basically entering in your property into the financial system or systems of trade. Then there's layering, that's adding complexity, so it's hard to trace back to that first, where did that money come from? And the last piece is integration, which is enjoying it. Really at the end of the day. So that really covers mostly both on placement and layering components.
So I always have this question, how much of the AML concerns are related to a lack of understanding of blockchain technology, and that blockchain technology itself is infinitely traceable and 100% unerasable. And I guess it's the mixing component that
it's the mixing, and also the amount of effort to dig through every single wallet going in every one of those transactions to find out who the heck are you, right? Like in the last 10 years, financial institutions are finally solving who's Gene DeMira versus Eugenio DeMira. Yeah. Like those types of challenges, much less going into cracking all of those wallets from a non-public wallet. Right, so who's going to publish the Bitcoin directory of who owns every single wallet tied to every single Bitcoin transaction? No one's going to publish that. It doesn't exist.
Track it.
You can track it. Yes.
You can track it, and once somebody comes out of it, you can track it all the way back.
Yes. The challenge is there's so many different wallets out there. It takes. It's been described to me in the time that somebody has lunch, they've created 5 more wallets or 10 more wallets. Right. So those are things.
Blockchains.
Yeah. So I think closed loop systems fantastic. There's great opportunity. It will be leveraged. Like those are critical, and it gets to the ID point, which is actually where I'm going with on this as well. Sorry, how am I doing on time?
I'm definitely tracking time. So it's been half an hour. So it's been about half an hour. But
okay. How are people feeling about?
We can open the floor if you want to questions and have a more dynamic format if you want, or
let's
it's
do
up
that.
to you.
Sorry.
I just wanted to go through one more example. Maybe it might take about 3 to 4 minutes. Yeah. It's a topic I'm pretty passionate about, and I'll give you where you can get the traceability to it, because I personally think it's actually both. It's a hidden piece related to this. that is improving dramatically over the next 2 to 4 years, and will solve a lot of these challenges that I think a lot of people undervalue, and that's identity. It really gets down to identity. So the biggest challenges financial institutions have are both identity and then what's reasonable for what proceeds and what property that you have tied to that identity. But if you have identity solid, then you're going to be successful. And this is going to help world commerce. There's UN reports, World Economic Forum reports that I encourage you to look up, the World Economic Forum and identity. There's some fantastic reports there talking about how there's goals to try to have 1 billion people identified by 2020, which is a lofty goal. Identity is critical in moving entire countries and economies forward, because without having identity in either a digital or physical format, how do you tie property to anything? How does somebody own property in order to move their life forward in their business?
We've done a lot of work in this area, and I think we've drawn the same conclusion that everything comes down to identity, whether it's a blockchain voting-based system or a currency or a property registry or anything. They all tie back to a digital identity somewhere.
Exactly. And bringing it to Canada, where we are there, is this has been identified by the Competition Bureau in December, by the Department of Finance. It's an area that's actively being worked on in Canada. Canada, that group that I mentioned earlier, the DIAC, Digital Identity and Authentication Council of Canada, is doing a lot of work on the principles related to identity. And it's important to make it principles-based, because then you'll empower innovation, that everyone knows I just need to do my tool to meet those principles and meet it securely. Then run it through a sandbox to prove my concept. Once I do that, then I've got a tool that's solid, that's out there. Identity is innovating tremendously in different ways. Europe is getting a really solid digital identity framework in execution this year. China has 2 solid different ways of dealing with digital identity, including facial recognition. There's a number of different models that are out there that are pulling in identity. Identity is more than just putting my fingerprint onto my iPhone and being done that way. That is just one of many elements of authentication, just like facial recognition is, just like taking a picture of your passport, comparing it to yourself. That's just one piece. It's how does it all fit together, and then how do you have a unified space to that. And there's ways in doing and balancing identity with privacy, and privacy by design principles. And there's ways of protecting it so that the person that owns their identity, they own and control the proper way that it gets worked with. But at the same time, anyone that is doing business with you has a right to ask for that identity. And if you want to say no, then that's fine. That's just like saying, I want to have a business contract with you, but I don't want to tell you who I am. Well, then they may not want to have a contract with you. You have that decision to make. But it's putting those decisions in the hands of the consumer and not in a big brother fashion, and there's ways of doing that. So there's Canadian models in that. That is something to watch that I encourage everyone here to watch in the next 2 years. There's a lot of innovations coming in the next 6 months in Canada, and definitely in the next 2 years that regulations are going to support.
So the identity, if someone asks your identity, he will know what properties you have, what's your worth.
Potentially, depending on how it's structured at the end of the way. Today, a property registry will list a name and a couple of very limited identifiers. Personally, I would hope that in the future, you would have enhanced traceability and protections there. So that way someone can't steal that property in front of you. There's been cases in Toronto. There was a case whereby where a lawyer was a fraudulent, like the criminals walked into a lawyer's office and they literally provided enough fake identification that looked reasonable, that they were the victim as much as anything, and they were able to steal a property underneath a person and sold that property to someone else, got the proceeds, left the country with those proceeds, and then literally the moving truck showed up and the poor homeowner is like, what do you mean that I sold my property to you? I don't know what you're talking about. Like literally a homeowner came and everything else. So it's amazing. So they're touch on everyone here to research a concept called open banking. And it's not making it public that you own that, but making it possible for you to provide a validation to the financial institutions that you're dealing with that this property belongs to me, this property belongs to me there. If you're doing a transaction where you're moving your portfolio from CIBC Wood Gundy to Manulife Securities, there's my own little plug there, you can do it on something called an ACON transfer, and that transfer allows you to move your assets, those share certificates and value equivalent, from there to here without actually selling the stock there, selling the stock here. And as a part of that transfer can only happen if we get a validation that yes, it's Pablo there, yes, it's Pablo here, and therefore there's no change in property. So that same type of thing. Open banking is going to provide consumers with a secure way of letting us know, yes, that's my bank account at CIBC, yes, that's my bank account at Manulife, I'm moving it over. If there's a change in property, then we're going to want to see, I want a release for that property. So I want a release for who owns that, and I may or may not ask, depending on the value, what is the relationship there? If it's a small amount, I'm paying my painter, they're not going to ask for that relationship. But if there's $5 million coming, I may ask as a financial institution, well, can you give me a little bit more information about that property that's being moved over, which is reasonable? And that's a protection, consumer protection for both the person releasing it and the person receiving it.
Isn't it, there's a bit of a trade-off in that you want markets and open banking for, you want transparency on the platform so that everyone can see, oh, there's $2 billion in bonds or whatever it is.
Yeah.
And different entities own them, but you don't actually know the specific entity. It's if the bank or institution needs to know the entity for trading purposes, then they know it, but still the public doesn't know it, and they might see it.
Exactly. There's those adequate protections that are in place, and something a lot of people don't know, sorry, I know we have two questions over here, is that behind the scenes, financial institutions, anyone holding property in the financial network, we have to make sure that our clients are not terrorists and are not on anti-terrorist watch lists, and that includes drug cartel people from OFAC, from the US and the like. And we have those obligations for what's called screening to check into those things. So there's a lot of behind the scenes things that happen. Then if you have a match, then you have to investigate it and those things. So there's a lot of obligations on us. So we want to, I think the biggest thing from financial institutions as they get into fintech is making sure that there's a level playing field, that everyone's doing those controls and there's no weakling. So, sorry, there's a question over here. We'll go through question and answer now. Actually behind you first, sorry.
Yeah, so I was just thinking this identity protection, this digital identity thing, I guess what you really want to be providing people with is more like permissions or sort of one-time use keys in order to access particular parts of particular information from your digital identity, like such as credit rating or sort of like what your actual name or those sorts of things.
Yeah. So a lot of it is actually, there's a lot more out there about all of us than we can fathom in many ways. The amount of information that you have with all of your different financial relationships, all of your other personal relationships, for example, with the telecommunications industry, with the government. There's so many different touch points of databases out there. There could be opportunities in the future whereby a customer can empower this institution to say, to vouch for this person over this institution relationship there, and you're releasing how much information goes from here to there, but you cannot change that information. So you're saying this table is vouching for me that this table is okay. Like when you have ID today, the government of Canada or the province of Ontario with that card is vouching for you that this is who I say this is. So that's what they're doing. They're using a trusted record to match that. The new powers of technology that are going to come out allow for different kinds of other trusted records from different providers.
And what I may say is this goes on now all the time, for example. So if you're logging in on some so Identity Mind is a great example. So you know what I'm saying? So this is happening now.
So you could sort of, like, what we want to go towards then would be like you sort of owning this data some way, it's stored in a blockchain so that you can't go back and try to change it just however you want. But sort of you're the only person who can sort of read all of it. You give permission to different institutions to be able to read certain things at certain times.
Yeah, and we're doing a lot of different reviews of the principles of what will make sense for a longer term sustainability. For example, we're respecting the cybersecurity tests related to the varying degrees of security that you want to have for data at rest versus data at motion. And the core privacy concept of only asking for information when you need it. Because actually, if you ask for more information than you need, it's expensive. And it's just not good business. Even though it may be wanted by marketing here, marketing there, different social media, data mining engines aside, don't ask for more than you need is the premise for most financial institutions and privacy principles. And so a lot of these are having that balancing act between security, privacy, and those tools, because it is dangerous and it is being recognized as such. And that's why it's probably taking us this long to come up with really good sustainable digital ID models, because we recognize the risk of hacks. India, for example, in the first 2 weeks of January, had one of the largest hacks of personal information ever. Their main ID repository was hacked. Now that being said, they doubled down, and that is, I think, the smart strategy. But those are the pieces that hacks are going to be a way of life. We already have a lot of our information on the dark web as well as the regular web, and those pieces that we got to figure out how do we contain it, make it person to person, and use these databases and data sources as tools leveraging financial technology.
So a lot of this all hinges on different parties digitally signing transactions or something, or yes, he is digitally signing it, I said we are.
Yeah.
How do you, like a birth certificate or a citizenship registry really needs to reside with provinces and governments and stuff like that. Yeah. Yet I'm the person who's, in a transaction, I'm usually saying to TD Bank or whatever, I'm a Canadian citizen, I'm this, I was born in Ontario, and then they're going to go out to the proper party to verify that it's true, or I'm going to hold something in my wallet that says I really am.
A lot of things, that's a great question. The anti-money laundering principles that you'll read up, the Financial Action Task Force is an international group set up by the UN and IMF, I believe, to set up anti-money laundering principles worldwide. I probably should have led with that. So those principles then shape government laws, regulations, and what we call regimes, or the way that we all interact, and how financial institutions put their programs together. And the biggest #1 premise of it all is a risk-based approach. So when you're presenting your information, if we don't have any reason to believe you're doubting that that information is not valid, then a financial institution will take those records at face value, store it, not have to validate it per se. If you have risk factors that come in, or certain transactional activity, you're saying, I am born and raised in Canada, I work at a local Tim Hortons, everything else is local, 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 and then all of a sudden you're getting a whole bunch of wires in from Florida, and then from Ecuador, and then Ukraine. We might ask a few more questions on that. Can we revalidate that? Do you now have ties to a foreign jurisdiction? Because your situation, your life events could have changed. You could then say, yes, you know what? My father owned a small hotel chain, and they had locations over there, and they're selling those locations off and giving me the proceeds. Or you could say the opposite of, they own that, I now am the owner of all those, and now I have financial relationships in all those jurisdictions. Well, if that's the case, we're going to say, okay, give me the tax identification number for Ecuador, Ukraine, like all of these other countries, because we now have an obligation to do tax reporting to the Canada Revenue Agency that goes to those jurisdictions as well, that they then reconcile for you your taxes worldwide to prevent proceeds of crime. So all of these things are interconnected based on the risk-based approach into that mix. So, you know what, I do need to give a 5-minute quick intro.
Introduction.
Sorry, and over a 5-minute introduction over here. So Natalie's joining us from the AML shop. So I've worked quite a bit for a decade or so with the founder of the AML shop, and they have a huge range of great expertise in anti-money laundering. So if you're setting up I'll let her do the full spiel, but the way that I view it is if you're setting up a company that may be considered a financial institution because you're operating in a security space, you're operating in exchanging property that may put you into the definition of a money services business, you need to have an anti-money laundering program together similar to a financial institution in a lot of those situations. So just like I said, how many wallets are giving you tax slips? Those types of pieces. So those are things that you want to make sure that your innovation is assessed to see whether you should partner with the financial institution to provide them the tools and sell them your technology and let them be the financial institution, or be one yourself. So and give you those answers to those questions. So I'll just hand it over now.
So I'm just gonna keep this very short. So Gene has done an excellent job setting out what all the issues are. What we do in the AML shop is we help people resolve those issues. And I might say we do entrepreneurial work. So we work a lot with cryptocurrency businesses. My personal history is I was the General Counsel and Chief Compliance Officer for Sun Life Asia. So I lived in Asia for a bit, Beijing, Mumbai, Hong Kong. Came back and became enterprise-wide Chief Compliance Officer with accountability for AML, privacy, general compliance programs, you name it. So we provide a wide range of services, not just anti-money laundering related, but relating to compliance programs in general there. But this stuff is tricky. It's not hard. It's hard to achieve the right balance between the solutions that traditional financial institutions have used and what real entrepreneurs want now in an evolving regulatory environment. So we've got excellent expertise. Jan works with the AML shop. Some of you may have worked with him. He has written the book. He has literally written a book on model recognition for anti-money laundering. I mean, we've got terrific people. So if anybody has any problems or issues they'd like to deal with, we can help.
I'll make sure to send also an email with the information that you just mentioned to all of you guys, so you'll have a link as well.
Okay. So I guess from here, like if there's any other questions, I'll definitely be open to answering them, or we could just start the networking side.
Are you aware of any artificial intelligence tools to kind of mine or track the legitimacy of cryptocurrencies transactions?
To my appreciation, there are a number of tools that are out there from a few different vendors that try to do traceability. There's different wallets that have been attached to particular breaches. I believe iWannaCry had a number of mapped wallets and the like that law enforcement's keeping an eye on and the like. So there are a variety of tools in that space. I haven't worked with any of them, so I can't really talk to that, but just from my readings, there's a lot out there.
So I can comment, there are quite many tools used in US and in FBI or IS. I think the company, one is called Eclipse. And there's another one, actually our partner in Vancouver, it's called Blockchain Intelligence BIT. It's partner trade, I believe, so if you want to, we can give you the
Did you say blockchain intelligence?
BIT, Blockchain Intelligence Movement.
Yeah.
Right, guys, thank you so much to Gene for doing that amazing presentation. We're going to start networking. We have food and drinks there. We have some platters, so feel free to chat. And thanks again for coming.
Thank you.
Thanks, everyone.